Welcome to AML classes. What is share? Meaning and different types of shares. In the context of finance and investing, shares refer to units of ownership in a company. When you purchase shares of a company, you become a partial owner of that company and are entitled to a portion of its profits, as well as certain voting rights and other benefits. Shares can be classified into various types based on different attributes. Here are some common types of shares. Ordinary shares, also known as common shares. Ordinary shares are the most common type of shares issued by a company. These shares represent ownership in the company and typically entitle the shareholder to voting rights in corporate matters. However, the voting power may vary based on the class of ordinary shares held. Shareholders also have the right to receive dividends, which are a portion of the company's profits distributed to shareholders. In case of liquidation or winding up of the company, ordinary shareholders have a claim on the remaining assets after all debts and obligations are paid off. Ordinary shares may have different classes, such as Class A, Class B, etc., with varying voting rights and dividend preferences. Preference shares, also known as preferred shares. Preference shares have certain preferences over ordinary shares, usually in terms of dividends and capital distribution. Preference shareholders receive fixed dividends at regular intervals, and these dividends must be paid out before any dividends can be distributed to ordinary shareholders. In the event of liquidation, preference shareholders also have a higher claim on the company's assets compared to ordinary shareholders. However, preference shareholders generally do not have voting rights or have limited voting power. Cumulative preference shares. Cumulative preference shares come with a special feature where, if the company fails to pay dividends in any given year, the missed dividends accumulate and must be paid out in the future before any dividends can be distributed to ordinary shareholders or common preference shareholders. This feature ensures that cumulative preference shareholders eventually receive all their entitled dividends. Non-cumulative preference shares. Unlike cumulative preference shares, non-cumulative preference shares do not have the feature of accumulating unpaid dividends. If the company skips paying dividends in any year, the shareholders do not have a right to claim those missed dividends in the future. Convertible shares. Convertible shares give shareholders the option to convert their shares into a different class of shares, usually ordinary shares, after a certain period or under specific conditions. This conversion allows shareholders to benefit from potential future increases in the company's value or performance. Redeemable shares, also known as callable shares. Redeemable shares are shares that the company can buy back from the shareholder at a predetermined price and on specific terms. These shares have a maturity date after which the company has the option to redeem them. Redeemable shares provide companies with flexibility in managing their capital structure. Founders' shares, also known as Class F shares. Founders' shares are typically issued to a company's founders and often carry special rights or privileges, such as higher voting power or special dividend preferences. These shares allow the founders to retain control of the company even if they own a minority stake. Employee stock options. Employee stock options are a type of shares offered to employees as part of their compensation package. These options give employees the right to purchase shares of the company at a predetermined price, exercise price, within a specified time frame. Employee stock options are a way to align the interests of employees with the company's performance and growth. Treasury shares, also known as repurchase shares. Treasury shares are shares that were once issued by the company but have been bought back and are held in the company's treasury. These shares do not have voting rights or receive dividends. Companies may reissue these shares in the future, use them for employee stock compensation plans, or retire them, reducing the total outstanding shares in the market. Bearer share. A bearer share is a special type of share or stock certificate that does not have the owner's name or any other identifying information on it. Instead, the person who physically possesses the share certificate is considered the owner and has the rights associated with it. Bearer shares are often referred to as bearer securities because they are payable to the person who holds or bears the physical certificate. Bearer shares can be transferred simply by physically handing over the share certificate, making them anonymous and easy to transfer. This anonymity can raise concerns about money laundering, tax evasion, and other illegal activities, as it is difficult to trace the actual owners of these shares. However, many countries and international bodies have taken measures to limit or eliminate the use of bearer shares due to the potential for misuse. For example, the Financial Action Task Force, FATF, has called for the abolition of bearer shares, and many jurisdictions have implemented regulations to restrict or abolish them in an effort to increase transparency and combat financial crimes. It's important to note that the specifics of share types can vary from one company to another and may be subject to different regulations in different countries. Before making any investment decisions, It is crucial to understand the specific characteristics and terms associated with the shares you are considering. If you're interested in investing in shares, consult with a financial advisor or conduct thorough research to make informed choices. Thanks for watching.